The way people invest their money is changing. Increased financial literacy and new technology have transformed the asset management industry. Here are some trends that can affect you. Trend 1 is passive investing, an investment strategy that aims to minimize the amount of buying and selling, and which is the opposite of active investing. The idea of active investment is easy to grasp. A professional fund manager makes aggressive investment bets to outperform a pre-specified benchmark, that means a certain market index. Unfortunately, outperformance is very rarely seen. More than 80% of all actively managed equity funds underperform their benchmark, which is primarily due to high management fees. Hence, the better solution is to allocate your money into passive investment products, such as exchange-traded funds, also called ETFs. ETFs simply replicate a market index and carry low fees. On average, changing from active to passive will enhance your annual investment performance by more than 50 basis points. Trend 2 is factor investing. Recent improvements in data availability and computing power enable researchers to determine common attributes that drive security prices. Factor investing is an investment strategy in which securities are chosen based on these attributes and that are associated with systematically higher returns. An example of such an attribute is the so-called value of an asset. To invest into value, a fund manager holds a portfolio of stocks with high book-to-market ratios and is short of a portfolio of stocks with low book-to-market ratios. The beauty of such a strategy is that it can usually be replicated in an ETF and that it greatly enhances overall portfolio diversification. The third trend is new alternative asset classes. New classes of investments are more now than ever available and are becoming increasingly important to individuals. Examples of such alternative asset classes include hedge funds, private equity, and infrastructure. In the same way as for factor investing, allocating money into these alternatives has the power to greatly increase portfolio diversification. We also see that investors are not only trying to make money with their investments, but aim to generate social and environmental impact, making the class of socially responsible investments one of the fastest growing asset classes. In order to stay competitive, asset management companies will have to adapt to these three major trends of investing. Only when they are successful in doing so, they will be meeting the requests and desires of the investors of the future.